Hi, I want to say hello to Dan Murphy, who is a branch manager for Annie Mac Home Mortgage. And he is kind enough to give me a few minutes of his time today to ask a couple questions because I know I've had a lot of questions. It's something that keeps coming up a lot in the real estate world. Whether you're doing a transaction right now or another time, what's going on with mortgages and what should we do and going forward. So we have a couple questions I'd like to ask from Dan, if that's okay. But I want Dan to just tell us a little bit about who he is and how long he's been doing this.
Good afternoon, Jess, and thank you. I appreciate the opportunity. I've been doing this for a long time, let's say about 35 years. So I've been through this before, but not quite like this before. As you've heard 1,000 times, it's unprecedented. But I think after the past month, the beginning of April, we've seen some positive changes. The rates have finally come back down. The market where we couldn't sell loans, that's all changed. So we're in a pretty good place right now. We are closing loans with no problem. Rates are back in the threes. They were over 5% for a little while. Nobody knew that, but they have come back down. So we're in a real good place again. I'm happy to report.
That's good because there was a lot of fear and there was that, like you said, that 5% where people weren't, it was really unstable and really not knowing how things were going to go. So I want to ask you about that in a little bit. But one of the first questions I was probably going to say is, for you, how is the market? But now that I think about it, it's kind of a loaded question because none of us have the crystal ball to kind of see exactly how the market is. So maybe a better question would be, I mean, you and I in particular, we've been working together a long time. You know,
Sure.
You've been my go-to guy for over a decade at this point. Everyone knows Dan Murphy, the dream maker. So you have done a lot of closings for me with the majority, I would say, of my clients that we have. So we've closed a couple recently. We have one on the books right now that does need to close. And I talked about this with another broker earlier today, that people kind of ask, like, how real estate is still working. And the reality is, and you can attest to this, there are people who have to buy and sell no matter what's going on right now.
Absolutely.
Right. And it's, we have to get creative, but we have to get there. We have to make sure that we can still get things closed because of our customers and clients who do have this need that no matter what, life is still going on for them. So one of our clients right now who's closing, they have a lease ending. So we have to get them closed. I mean,
Yes.
We have a deadline and that's what we have to do.
Yes.
So what I would say is, how are you closing loans and what are you doing now in this environment where we're keeping a distance and not really able to be in person?
Well, it's we transitioned pretty well. We have everybody working from home. We have 600 employees, and I think all but 10, well, 11 because I'm in the office, but I'm the only one in the office. Everybody's working from home. We've prepared for this for many reasons. I think going back to Sandy. So we've been prepared from having to work from home for a long time. We did it over the weekend. Very, very easy transition. Appraisals are being done with no problem. That's probably been the biggest change is there are a lot of drive-bys now. Appraisers do not have to go in the house, which is great. It alleviates any fear that the home buyer has or the seller. But besides that, underwriters, they're all working from home. It hasn't been much of a change at all. In fact, we just had our biggest month in about 3 years right now, currently, and the month before in closing. So it's all going through. I think one of the biggest things that you're hearing out there, though, is that the programs aren't available. And that's simply not true. Simply not true. You can still do 3% down. You can do a 5% down conventional. FHA is still available. The biggest change I've seen is with the FICO score. So you need typically about a 620 to 640 is the minimum. Okay. And I think that's a temporary issue, but yeah, no problems at all. We're funding loans, closings are a non-issue. Nothing has been stalled. Like I said, down payments and credit scores are where they were about a month ago. So overall, it's much better than what people think.
Yeah, for sure. That's much better because you were hearing the credit scores had to be so high and they were going to require 20% down. And in our market and most of New Jersey, I think there's a lot of loans where people are not putting 20% down or having credit over 700 or 720.
Yeah. Yeah.
So,
Probably 90% of the business we do is over 90% or 10% down loans. So yeah, still not a problem. We're still doing them.
right, that's really good. That's really good. Yeah, I feel a little bit better at the
Yeah.
moment than I did
Good.
maybe before we had this little conversation.
Good.
See, you always make me feel better, Dan. Um, okay, so for the credit scores, you said 620 to 640 right about now?
We're currently at 640. We're
Okay.
thinking we can ease up maybe in the next 2 weeks back down to 620. We used to go as low as 580.
Okay.
Honestly, we didn't do a lot of those because typically what we do, and you know as well as I do, that we work on getting people's credit scores higher.
Right.
So even if they're not ready to buy right now, we're still doing a lot of that. I'm doing a lot of credit analyzing to get the scores up to 660, 680, because your interest rate is based on your down payment and your FICO score.
Okay.
So you've referred people to me. We work on getting their FICO score higher. So currently it's at 640 is the minimum FICO score.
So can you talk a little bit about that? Because I think that's a really good program, the credit analyzer that you have, and how to help people with their credit scores. It's a little bit, I think it's pretty, I don't know, is it unique? I think it's pretty unique. It's probably one of the first I've heard of. So can you elaborate on that?
Sure. Well, it wasn't around 5-6 years ago, but it's something new that we have. It's a real simple tool. I run your credit report, and then it will tell me the potential improvement. And then we take it a step further. And if it says, for example, hey, pay your Visa credit card down to X amount, your score will go up, and it'll project out into the future. It says, well, if you're not doing it now, if you do this, what the impact could be in 6 months. So it's a great tool. And we've had probably 98% success rate with it. So it's been a great tool. And again, if people are on the sideline right now, not sure what they want to do, we should do it now so that we know down the road what's going to happen.
Now, can anyone do that particular
Anybody?
tool, like if they're not currently getting a mortgage right now?
Yeah, what we do is we simply put the loan in as a to be determined, and we work on it. And not only that, if I don't know the score automatically, it tracks it for us. So if like 4 months from now or 5 months from now, I get an alert, Mr. and Mrs. Jones, their credit score hit the minimum that we're looking for, I contact them, and then we start the process. So even if they're not monitoring it, we are. So, and it doesn't cost them a dime, absolutely free to do it. We track it.
So, and I don't mind getting a little personal here because that's kind of the point. I didn't know if you were doing it as a favor to me or not, but you know, just in general, you want to build up your credit score. Like,
Yes.
I'm not buying a house right now, and I don't know what's going to happen, but having good credit or getting your credit in shape is a good thing. And I think a lot of people are ignorant about how to actually do that. People think, all right, I'm just going to pay the whole thing off, and that's great, but that doesn't necessarily translate into increasing your credit, your actual score.
Correct. In
right?
fact, sometimes that could actually hurt it. And the thing you never want to do is close the account. So sometimes people say, hey, I paid the whole thing off. Like, no, you shouldn't have done that. It's an algorithm that we really don't know how it works, but it's best if we do with a credit analyzer right up front.
And I think it was so great because for us, I know that it was like, all right, if you put X dollars on a Discover card, it's going to give you this many point boost to your credit score.
Right.
So it's helping us determine the smartest way that we're going to reduce our debt to maximize our credit score at the same time. So that I think is really neat. And if you're not necessarily sure, do I want to buy a house right now? Am I thinking of getting into the market? Having good credit is never a problem.
Correct. It's actually one of the biggest indicators, and the of people's ability to repay the loan, the future ability. So it's probably the biggest factor in buying a house is the credit score, without question. Yep.
Okay. So that's great. But as a side note, speaking of credit scores and different programs that are going on, I know that there's a lot of lenders, mortgage companies or car loan companies that are doing these payment deferrals where you don't have to pay anything for 3 months, or the forbearance program, which doesn't tack it on at the end, but it says you're not making a payment for 3 months and you give the bulk at the end of that 3 months. That has an impact on your ability to refinance or make a purchase, right?
It does. It does. It's pretty unclear right now how that's going to be reviewed. So right now, everybody can ask their lender to do a forbearance. So it's a deferment or a forbearance. The difficulty with the forbearance is when it comes due. So typically you have a conversation. and they could say, yep, you qualify, no payment for 3 months. But the whole thing is due in 3 months, plus your new mortgage payment. So I don't know how many people, I don't know how many people have the ability to save money up. If they had the money to save up, they'd be making the mortgage payment.
Right.
So
it's stressing me out.
Yeah.
Like,
Well,
that program is a big concern because you need to be disciplined. Like, we don't know how long this is going to go on for. You need to be disciplined for the next 3 months, not to spend that money somewhere else or move it to something else. And I think what's really important, and I want you to correct me if I'm wrong, which is why I'm rudely interrupting you. But if you are in the middle of a forbearance and then thinking, all right, I'll just refinance out of it and get into something else, you can't do that, can you?
You can't do that. Once you're in forbearance, it's a tag on your credit report, first of all. It's not like a judgment, but if I ran a credit report, it would simply state forbearance. Not only that, lenders are now requiring borrowers, when they're filling out an application, to state if they are currently in forbearance or even plan on going into forbearance.
Okay.
The better option, if even possible. I mean, people are struggling, so you do what you need to do, obviously. I'm not telling people don't do that. By all means, it's difficult, right. So do what you need to do. But the better option, if possible, is to do a deferment where you could take the payments and put it at the end of the loan.
Right.
Or even amortize it over the remaining life of the loan. So that is the better option.
Are you seeing that in a lot of loans? Like, are a lot of lenders doing that?
It's on a lender by lender basis. I have heard that some lenders are definitely doing that. They're putting on the tail end of the loan, and that's the better way to do it.
Right.
You're trying to get back to a point where you can afford the payment. You will have to get your job back. So that's more important than telling the customer, we can't work with you on it, and they're trying to.
Right. Yeah, because I had talked to somebody who said, all right, well, I'll just push it off, and then in a couple of months I'll just refinance and wrap it all up. And you can't do that. And
you can't do that. You definitely can't do that. And what the bigger thing is, we don't know what it's going to do to the credit score, because of all the missed payments, you never want to be late on a mortgage payment if you're applying to a lender for a mortgage. So that's a big hit. But again, pardon?
Are they counting or credit reporting right now?
I've only seen one credit report so far with somebody in forbearance, and it wasn't on a mortgage; it was on a student loan.
Okay.
And it came up as natural disaster / something else. But it's
did it have an impact on their credit?
I can't tell yet. I don't know yet. I don't know what the credit score is before that. They only told me that it was higher before that came up, so I don't know.
Mm-hmm.
That's
Crazy.
The whole thing. It's such an unknown. You don't know how it's going to be handled. What they should do is not penalize people with the credit score either. So you can have the government telling you one thing, you have to give them the forbearance, but you don't know when it comes out through the credit industry how they're going to rate it.
Scary.
It is scary. But if I would do it, I wouldn't wouldn't miss the payment. I'd definitely contact my lender, explain the situation, and go into forbearance and have the conversation.
Yeah, I think so. Okay, so I wanted to get clarity on that because, like I said,
Sure.
I think there's some people who are thinking about doing the refi to wrap in anything like that, but knowing you're not going to be able to is a big deal, and something I think people really need to pay attention to. So, aside from finding an agent that can assist virtually and safely, obviously, is most important, which goes without saying. What should a potential home buyer be doing right now? Focusing on right now as far as moving forward on their loans? Are you seeing that they have to do anything differently?
Well, I spoke with someone yesterday. They're not ready to buy yet. They're looking sometime in the summer. They're hoping that the employment situation is better. So we just started a pre-approval. As you always push, get pre-approved for a loan. Let's find out where you stand with your credit, your assets, and they're filling out an application, and we're putting it on hold, but they're ready to go when the market opens up. The good news, Jessie, is no one really sees the rates going higher. So it's not like you have to rush into it. They're stable now. We're expecting them to stay in the mid threes. So there is that time. In fact, we believe that you'll probably be in a range of somewhere in 3.25 to 3 3/4, probably over the next 2, 3, 4 months, something like that. Yeah. The biggest thing we're looking at right now is just strictly employment. That's a huge factor for us. Before anybody closes now, we check 10 days before they close and 3 days before they close, just to make sure they're still employed. And If they're in industries that's been all over the news, if you're in the restaurant industry, unfortunately, we will review that more closely. If you're self-employed, again, we look at that a little more closely as well. But for the most part, we are still closing. We have decided not to take loans and just say, hey, based on what we think they're going to do, we're not going to close it. It doesn't work that way. If they're working and we can demonstrate that they're going to continue to work, we're closing the loans.
Okay. Well, that's great news.
Yep.
Great. So that was going to be my next question, kind of where do you see the rates going? So we do see that there's going to be some stability to those lower, more beneficial rates for a fair bit of time to come.
Correct. Yeah, the Fed did step in again, probably about 4 weeks ago, and they started buying bonds when nobody else wanted the bonds, and that had a huge stabilizing effect. So the rates have stabilized, and if this had not happened, we might have even seen rates in the high twos. That's where the market was starting to go until this hit. So we're in the mid threes overall, and that's great. It's still historically low. It's lower than it was this time last year.
It's crazy, right?
Yes,
I mean, it really is. It's a remarkable time to be a buyer.
Yep.
It really is. So for those who already have homes and are thinking of doing a refinance, what would you suggest? Do you wait? Do you do it now? Do you do it later? Is there any value one way or the other?
Maybe a month ago, I would have said we can just hold off a little bit to see if they do go lower. I don't know about that right now. I don't think they're going to get into the twos. If so, it could be a while before that happens, if it happens. So the typical refis I've been dealing with, I've got somebody who had a strategy. They're closing. They closed in the first week in April. So they made no mortgage payment in April. They will have no mortgage payment in May, and their first payment comes due in June. And they're getting a refund back for their escrows. So for them, it was a home run. They did have some financial, instability, but this worked out perfectly for them. So, I've got situations like that where people can take a couple months off if we structure it. We've got people who want to reduce their term from a 30 to a 15. I've got other people who are taking cash out just for emergencies, or they're afraid that maybe if their kids are going to school in September, they may not have the money then. So all sorts of different reasons.
Okay.
But but again, we're still closing loans if you can document your income and your credit is still strong. Same factors as always.
Okay. So I think the last thing I would ask would then be, is there any other advice or last words you'd want to give on what's going on right now with mortgages and kind of our environment in general?
Yeah, I mean, forget what we hear on the news every day, what's going on, the numbers count, and nobody wants to listen to it anymore. Well, if you're hearing the same thing in the mortgage industry and the real estate industry, it's not true. You can still buy a house. We're still closing loans. From your side, I know it's more difficult for a homeowner to look at a house, but you guys are smart. You're going to figure that out. But the mortgages we're still closing loans. Not just us. Most lenders are still closing loans. So, if you want to buy, keep buying. Don't be afraid.
Okay. On that note, don't be afraid. I like it. Thank you very much for taking time today with me to get some clarity, because I know we talk all the time, but I got some stuff out of this too that I didn't quite realize. I think I need to grill you a little bit more when we're talking. But
thank you, Jessie.
As always, you're the best. Thank you so much.
Thank you. Appreciate it. Be well. Okay.
Thanks, Dan.
Bye-bye.
Bye-bye.